You know who is negative on it? You know who really is negative on the student loan thing, and just it's such a bad deal. And this whole moratorium thing was really stupid, according to these guys. Dave Ramsey.
Is it our favorite person?
Yeah, Dave Ramsey. He's a big fan of our show, by the way. He loves us. I know.
We're his favorite.
Yeah, we're his favorite. They're going to talk about why the moratorium was such a bad thing. And once again, in another segment we like to call Dave Ramsey Show Didn't Read the Actual Article.
I feel like we could name several episodes they didn't read the article.
Yes, we could. Every episode of the Dave Ramsey Show is they didn't read the full article. So here is what's this guy, John Delony. So they're going to talk about where the moratorium went wrong here.
Study that could be done, because you had a group of people. Biden couldn't pause the bank loans because he didn't have the authority, because it was the banks that made the loans, but he could pause the loans that the government made. And
so he's just saying private loans you can't pause, but the government loans you can, because you're the government, right? You know, basically I can drive my car because I own it, but I can't drive Lacey's car without her permission. Right? Simple.
These researchers came in and said, what actually happened there? And Dave, I was sending emails to Dave this morning as I was going through the math on this thing.
Okay, first off, I want to clarify this. I will cut off my left foot if these guys have ever gone through the math on anything.
All right. So anybody who wants to see that happen, find us that episode and send us the link below.
They have never gone through the math on it. They always screw it up, man. They never gone through the math. There is no way he went through the math. Okay.
At the end of the day, they found that the payment pause helped for about 30 seconds. And the people who had to keep making their loan payments did not have any increase in defaults. They didn't have any increase in their life falling apart.
Whoa.
The word I kept coming.
The people who had to keep making their payments did not have any of these issues. There are no people that had to keep making their payments, unless you're somehow magically talking about private loans or something.
That's what the comparison. That's what the comparison is. So the comparison is the people that were making private loans versus people that got the moratorium. But the people making private loans, once again, what do you have to get a private loan for college? A good credit score.
Right, you have to have a good credit score. But also, let's stop and think. Some of those people who have private loans also have federal loans, probably most of them, because I used to have a private loan, and the reason I got the private loan is because my federal loans were not enough to cover the cost. So additionally, I got a private loan. So has it occurred to you also that maybe, I don't have to make my federal loan payments, so it's freed up more of my money to be able to make the private loan payment?
Right. But the bottom line is, look, the people that had to continue making payments, they didn't see a huge significant change. But then again, a lot of them tend to be more white collar. So you probably wouldn't. Because they didn't have to go through the shit where they lost their jobs or they couldn't get work during COVID, right? So that's part of what they're missing from this study, was there's a bias to that group, right? But they're looking at it as a control, just a comparison, right? But it doesn't really matter. What matters here is what happened to the people that got the moratorium, right? And why, what happened and why, right? And this is where they're going to get it all twisted, because once again, they didn't read it.
The words that kept coming to us, they figured it out. Conversely, those that were a beneficiary of the pause ended with more debt than they started with. And I just have to keep reading that and reading that and reading that, because, Dave, I remember Twitter tried to set you on fire when you said that $1,300 isn't going to change your life. It's not. Or $600 isn't going to change your life.
Whoa. Okay, first off, $1,300 isn't going to change your life. That's that was the payments. the loan relief payment or the COVID relief payments, right?
Yeah.
That has nothing to do with the student loan moratorium.
Oh, they're just talking about how Twitter hates Dave Ramsey.
Well, I guess, but no, they're
I don't think they have a point to it.
Well, his point is,
Other than that.
his point was, is okay, people that were on the student debt moratorium, where they didn't have to make payments, they were getting zero interest. Total, I mean, just on average, they accrued more debt, right? That's what happened.
Right.
Okay. What he's ignoring is what's actually in the paper, which we'll get into a little bit more detail here in a second. But then to skip from that, go to, well, gee, Dave, you were right because you said the $1,300 COVID relief payment wouldn't help. How is that related? I don't they're not making any sense.
I don't know if they have a point about that.
Yeah.
They just love to point out the places where Dave Ramsey is hated in order to, like, I don't know, rally their troops or something. I don't know.
And I want to remind our audience, Dave Ramsey's now in the middle of a $150 million lawsuit for committing fraud. So he's not hated for no reason. So let's see if he has another point. Then we'll get into this because they're going to get into this article and it's just redonk.
Is actually that pause made it worse. People took the money that was in cash that they weren't sending to student loans and they went and put it on down payments for more debt. So it looked like a great political move. It helped for a few months and then it got bad.
So everyone's life is going to fall apart because of COVID, and you cannot afford to pay your student loans. So we, the government, are here to help you. We're going to put your student loans on pause. The net result is that people took that pause and used it to go further into debt, proving that they were not in much trouble to start with.
Oh, thanks for playing, Dave. Fun. Here's what happened. They put the student debt on a moratorium so you didn't have to pay it, right? What happens instantly? You don't have to make that payment anymore, right? For whatever the pause length is. Okay, so what happens right after that? Your credit score just shot up by a lot. So now, if you need to get a credit card or buy a car or, I don't know, buy a house, which was actually the biggest chunk of what these people did, was they used that money to get that better credit score to get a home. That's where that debt is. Now, they think all debt is bad, but there is good debt. Buying a house is good debt because a house grows in value, right? But it also meant that these people had credit that if they had to move and get a better job, they could. So what did you do? You freed up a lot of pressure on the average person so you could free up the economy.
So they could do different things instead of just be settled there with the payments. And let's see, if they just didn't have those student loans there, or much less of them, it would do the same thing on an ongoing basis.
Oh. Heaven forbid people own homes and cars. Heaven forbid people live better lives.
Heaven forbid they're able to put more into their retirement accounts or savings accounts or afford a vacation.
Yeah. Well, we'll look at here. So this is the white paper they were looking at. And I'm going to skip up here. So debt moratorium, evidence from student loan forbearance. All right. So they just looked at, let's see. So they evaluated the effects of the debt moratorium that paused payments for student loan borrowers using administrative credit panel data. We show that payment pause led to a sharp drop in student loan payments. Well, yeah, no kidding. You don't have to pay it anymore, so people stop paying it. Amazing.
Delinquencies. A whole study about that.
Yeah, delinquencies for borrowers went down too, and increase in credit scores, which is what it was supposed to do. We find a large stimulus effect as borrowers substitute increased private debt for paused public debt, right? Comparing borrowers whose loans were frozen with borrowers whose loans were not frozen due to differences in whether government loans, blah, blah, blah. We show that borrowers use the new liquidity to increase borrowing on credit cards, mortgages, and auto loans rather than to avoid delinquencies. Right? The effects are concentrated among borrowers with prior delinquencies who saw no change in credit scores. Right? So we see little effects on following student loan forgiveness announcements, blah, 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 and the highly important. So the effects are concentrated among borrowers with prior delinquencies. So people who have problems before and saw no change in credit score. Right? So that changes kind of how these things happen. But what ended up going on here, we'll scoop down to, I think it's 11. Yeah, here are the results, right? So first, drop in student loan balances. There was a big drop in student loan payments, about $138 right out of the gate for most people. There was a sharp drop in student loan delinquencies because you didn't have to pay it. You're covered under the moratorium, right? The drop in student loan delinquencies is part of a mechanical as existing defaults were cured, and individuals with no payments are due are unable to become delinquent, right? And then what they go down and find out is what was the big thing? Most of the increase in debt is driven by mortgage payments. So what they're bitching about is they're saying this whole thing, it only helped for a little bit. It wasn't any good. When in fact, what happened was a lot of these people went out and got homes, or they were able to get better jobs because they had better credit scores, because they didn't owe this money. People that were looking at being delinquent or being in trouble got a huge relief because they didn't have to worry about it now, right? And that eating away at their credit. Because what happens if you go delinquent and stuff, the government can come in and seize, they can garnish part of your paycheck. Right?
Yeah.
Which is devastating. Sure. Which is, it's hard. It's embarrassing. You can lose your job because of that, depending what you do for a living. These are big issues. So they're missing the point. It did exactly what it was supposed to do. It stimulated the economy. We got these people into a better position, right? Now the problem is now that it's coming up to the point where they're going to have to start paying it again, which they never addressed. They're not addressing that people have to pay it now. They're just upset that people got more debt. They're really just pissed that people got relief. That's what they're pissed about. But now that people have to start paying it again, now that's where the issue is now you're going to see more delinquencies. You're going to see more people not being able to pay it because now they're going to get hit out of nowhere. And it's unfortunate Biden didn't do something better about it during the debt ceiling, because that's what's going to happen. And that's what we'll look at real quick here. So this is just the, I guess, got from the CFPB, the Consumer Financial Protection Bureau. So pause on the federal student loan interest payments and collections is now scheduled to end 60 days after June 30th. Borrowers will have to make payments. So in April 2022, we provide an overview, blah, 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 blah. So, but they're basically, these are the highlights of this whole thing. I'm not going to go through the whole report. So more than 1 in 13 student borrowers are currently behind on other payment obligations. These delinquencies are higher than they were before the pandemic because people had to take more debt, especially during the pandemic. And then people that had the option did take some more, especially in home loans, despite a small seasonal decrease in the most recent data. Okay. 1 in 5 student loan borrowers have risk factors that suggest they could struggle. So yeah, that sounds right. So these people, when the payments resume, 1 in 5 people are probably going to have a hard time. I don't doubt it. Medium scheduled payments on other debt obligations have increased 24%. For student loan borrowers likely returning to repayment, in percentage term, the increase is especially large for younger borrowers, right? So 252%, so $65 to $229 that they took in other debts, right? Because they bought homes and shit. Okay, more than 4 in 10 borrowers in our sample will return to repayment with new student loan servicer, which means they'll get somebody else they'll have to go through. So that's the big issue that's coming up, right? So we have On the one hand, we have the Republicans saying we're going to make it more transparent how much college costs, and that's our solution. So basically, we're going to tell you, look, how bad it is to go to college and how much you're getting screwed. And that's our solution to educating the American population and solving the debt crisis, student debt crisis.
That's just ridiculous.
I know. On the other side, you've got like Dave Ramsey over here going, well, look, see, whenever you give people a break and they get better credit scores, they take out more debt. So, and debt's bad. So honestly, we just could never, ever give poor people a break, which is what we heard from the earlier Republican guy, which was, yeah, if you want to get low income housing, you need to show work requirements, even though that's going to cost the taxpayers more. So they're all in favor of spending taxpayer money on useless shit. But they're not in favor of spending taxpayer money to help people to pay more taxes. Which seems backwards to me.
Yeah, it doesn't make any sense at all.
Right? I'm all for it. Yeah, forgive the student debt. You know how much taxes are going to increase? That's never factored into there. Because what's tax revenue going to increase when these people don't have to pay $80 billion a year in freaking student loans that the government's still not collecting all of? Because most of it has to go to fees and interest that the government pays. So taxpayers are getting raked both ways. Any way you spin the Republican way of doing this or the conservative way of doing it. It's just backwards to me. And yet that's what they bitch about. This is so stupid. Can't give debt relief because heaven forbid people spend money in a capitalism. That's not the point of capitalism. The point of capitalism is to keep all your money and hide it under your mattress, like Dave. So watch a little bit more of this.
They had the capacity now to get in even more trouble.
Exactly. Here's the note from the actual white paper. Comparing borrowers whose loans were frozen with borrowers whose loans were not frozen due to differences in whether the government owned the loans, we show that borrowers used the new liquidity to increase borrowing on credit cards, mortgages, and auto loans rather than to avoid delinquencies. So the narrative was...
We just read that out loud. Yeah, that's what they did. They spent more money, which is what they were supposed to do.
We are here to help you poor people who have had your lives destroyed by COVID, and you're not going to have to make your payments because we know you're starving to death. And everyone said, hold my beer, I'm going to go buy a car.
Sweet, now I can get a car.
Sweet, now I can...
That's not what happened. Because if they read the rest of the paper, which we read, the people that didn't have a change in credit score, guess what they did? They didn't do any of that. Because they didn't have a change in credit score. They didn't have a change in benefit.
Right.
So once again, Dave Ramsey didn't read the paper. They just highlighted some lines, and even then the lines don't prove his point.
Well, folks, you heard it here first. Once again, Dave Ramsey didn't read the paper.
Didn't do his homework.
That's exactly what the net result of this is.
Here's the line. By the end of the sample period, student debt borrowers have about 5% more household debt
than the ones that did not get the government help of the pause.
Perhaps paradoxically, temporary student debt relief leads to higher overall household debt levels and larger future debt burdens.
This is good news for debt pauses as stimulus payments, but bad news if you think that debt pauses are just the nudge people need to get their financial house in order. None of them did, statistically.
Wow.
But that wasn't the goal. And that wasn't the point. And this idea that it's COVID and you're getting some relief, and what are you going to do? You go, okay, I'm going to take this money and I'm going to pay off all my student loans with it, right? Or I'm going to take this money and I'm going to invest in getting a home, or I'm going to invest in my future, or I'm going to invest, or I'm just going to use it to survive. Right? Most people are not going to do it that way. So that's why it's ridiculous to sit there and piss and moan. Right? And the reality is we wouldn't be in this situation if everybody had the same college payment plan that Dave did. Because Dave paid a 12th of what a current college student going to his college paid. We've done that math a couple of times. And you know why he paid so little? because taxpayers paid for most of his college. And now he's pissing and moaning about college students get the same benefit today. And these are the same idiots that go, okay, well, we're gonna go to war with China or Russia, and we're all weak. And it's like, well, yeah, part of it is because we have a stupider populace because it's too expensive to go to freaking college.
Let's also not forget that when you declare a bankruptcy, essentially you're having your loans forgiven, right?
Yeah. Yep. And Davis had what, 300,000?
I was gonna say, can't think of anyone over there who's had that situation come up.
Yep. But that's the thing, is it's all, he can't see it from the mirror. I mean, he can't see himself in the mirror when he looks in it, I swear. It's like a vampire. Can't see his own reflection. Yep. Anyway, so that was kind of our bit. Just remember, with the student loans, contact your student loan support, or your student loan provider, and definitely try and get income driven if you can. You don't have to follow the income driven if you don't want. You can pay more, but just it's better to have that minimum than a higher minimum. So yeah, double check on all that, and